and welcome to Finextra. I'm Hannah Wallace, and with me now is Devaney, Vice President, Strategy of Banking and Financial Markets, and we're talking about payments initiatives from around the world and what lessons can be gained from them. Hello Sean, thank you very much for taking the time to speak with us today.
Thanks Hannah, good to be here.
So firstly, what lessons can be learned from the introduction of previous payment schemes?
Faster payments and real-time payments have been in the UK for about the last 10 years. We implemented it first in 2008. And I think we're probably the first major economy to implement retail real-time payments. So what have we learned from it? Well, I think the key thing is about planning and how you take advantage of those real-time payments. So in the UK, when we implemented real-time payments, the primary obstacle was actually moving the banks that were participating in the service from batch-based processing to being real-time. Now that we're 10 years on, that's kind of, par for the course. Everyone expects payments to be real-time. Everybody expects to receive and send things 24 hours a day. Actually, when we first implemented faster payments, the thing that we didn't really think much about was what else that service was going to be used for. So what were the other things that would be added on to faster payments, onto real-time payments, to make them more useful and usable for the whole community, for banks and end consumers as a whole. We didn't really look at what the additional services that could be to add on for innovation and new ideas in the market. It was all about getting real-time payments live and moving the banks away from those batch-based processes to real-time. If you look at what's happening in other markets though, particularly Australia and in the US, they've looked at, from the very start of implementing real-time payments, they've looked at how they can build overlay services and new functionality on top of their sort of core payment rails. In the UK, I think we're only just now getting to the point where we're really seeing innovation coming in on top of the real-time payments processing. So my view of things that we innovated on over the last 10 years, you could make an argument that the biggest single innovation was payday lenders. And I'll leave it to the audience to decide whether that was a force for good or a force for bad. Mm-hmm. But they wouldn't have existed if it wasn't for real-time payments in the UK. But it's only now that we're really trying to think about how we're going to build new products and services off the back of those real-time payments. And actually the work that's been done with open banking in the UK is probably the first real driver for new change and new opportunities for third parties and non-bank participants to look at how they take advantage of real-time payments. So in the UK, it was very difficult over the 10 years or so. It's been very difficult for new entrants to come into that market. It's been difficult for new banks to take advantage of real-time payments. They've all had to use services provided by the banks that were originally part of faster payments. And it's only in the last couple of years that any new participants have come into that scheme. So that's been that combination of difficult to enter the market and not providing enough thought about what the innovations and services that could sit on top of faster payments, I think are the key two things that were missing from our initial implementation of real-time.
All right, and you've touched on this already, but do you think these lessons are being employed in more recent endeavours?
Yeah, certainly I do. I think if you look at what's happening elsewhere globally, then certainly the idea of having a core set of payment rails that is critical to the economy, that allows real-time services to happen for the majority of your population 24 hours a day, 7 days a week, but separating that from the innovation and new ideas that third-party providers who aren't necessarily banks can bring into the payments ecosystem. I think we're seeing a lot more of that separation happening in new implementations of real-time payments. So I mentioned earlier the Australian model, where right from the beginning they've built into their approach the idea that you would have a core set of rails that is the critical national infrastructure, if you like. That's the thing that the economy relies on, so to move money around the economy. And that can't fail. That's something that needs to be robust and secure and stable, right? So innovating in that layer is very difficult because changing things there makes it very hard for regulators to manage how change happens in those critical national infrastructure rails. The idea with a lot of these new systems is that you use services like open APIs, so application programming interfaces, to allow other organisations, other third parties, to access the rails themselves, to access the service that's provided by real-time payments, but without having to interact directly with it. So that allows you to go and innovate on top of those real-time payment rails without the potential for causing problems in those in the critical national infrastructure of your country. And that then allows the concept of fast fail to happen in payments. So, up until today, we really haven't had any appetite in any major economy to allow any payment services to fail. But once you're starting to innovate outside of that critical national infrastructure through the use of these open APIs, then you've got a real opportunity to innovate, to have new ideas, and those that work will be successful, and those that don't won't be, and they'll disappear. But that's fine because you've separated that from your critical national infrastructure.
All right, and finally, moving forward, what are the key recommendations for banks adopting real-time payments?
So, as we talked about initially, when we looked at this in the UK, it was all about moving from batch payments to real-time payments. And in the UK, certainly we've moved beyond that now. Sure, in other economies that are implementing real-time payments, then absolutely, they're going to have to overcome that same hurdle of moving from batch processing to real-time. But that's a pretty known technique now. There's approaches to doing that. There's services out there to allow you to do that. I think the critical thing for organisations to think about now is not just real-time payments, but real-time everything. So how do you move your organisation from just real-time payments to real-time loan origination, to real-time KYC, to real-time funds, foreign exchange transfers, etc. So how do you move your organisation to allow your customer base to take advantage of the services that you provide in real time, rather than having to wait days or weeks to get a new account? And we're absolutely seeing that happening again through the adoption of open APIs, where we're seeing a real trend in the market where our client base is looking to leverage their partner ecosystem as well as developing services in-house. They're also looking to see how they will bring third-party services like perhaps foreign exchange. If you're a small domestic bank in the UK, retail bank in the UK or any other country, let's look at, rather than trying to do your own foreign exchange service, why don't you use TransferWise or somebody like that who can reduce your cost base down significantly and provide you those real-time low-cost services that your customers are demanding.
Fantastic. Well, Sean, this has been great. Thank you very much.
Thanks very much for having us.
And thank you for watching.